Okay, so market just consolidating at the high. Volatility is historic lows, nothing new there. We still need to keep an eye on IWM to see, well, first of all, we need just a couple of prices. The last 2 days on the SPYs, we still have to work through the dividend that was paid out a couple of days ago. So it looks like right above 250 the last couple of days, there's just no one willing to commit up there. See, the first day we got up to 6-7 cents, then yesterday we just kept on floating above but never holding above a nickel, it looks like here. Right on the open when we dropped out, we didn't even get to 249.60, so extremely tight. This might be one of the tightest ranges on a percentage basis on record yesterday. IWM. Sorry about that, I was looking at something. IWM, we sold a little bit in the morning, came back up, did not get back above 143.50. All-time high is up in that 144 area. 2 days ago, we did spike to 80 cents before pulling in a half a buck. So should have alerts above 143.50 and then 143.80. Those are the two resistance points. And if it flushes down to the 143 area, let's actually see what the subtrend looks like. Yeah, it looks like to me it just, it had an up leg and moved sideways for a few days, broke to the upside. It's a big move here, maybe another day or two, moving sideways. That would take us into a breakout on Friday. Okay, so Bed Bath & Beyond, what a disaster. You can see the initial reaction was even lower. They missed by 30%. And stocks already beat. Well, first we should actually look at let's look at the daily just to see how beaten down this thing is the last few years. So they ran this up. For a while, the low 40s was support for a number of years. And then when it broke down below that, it was the financial crisis and had this trend. Spent a while at 75 to 80, crushed it, consolidated for like a year, and then broke to the downside. And we're already, coming into, we have, sub 20 we haven't been since the financial crisis. It's really bad. So initial reaction took it sub 22. It did bounce to 24. It's looking like it might be a pretty good short there, 23.80 to 24. Downside, pre-market sports 22.70. I think 22.50 was the level in the after hours where it kind of popped back up to initially right there. So played in either direction. It normally trades 3 million shares. We're probably looking at, I don't even know, 20 million shares today or something. It's going to be extremely liquid. So you can really lay into it and risk no more than 10, 20 cents. Try to make 50, 60 cents on it, maybe even $1. It's trending. Let's get back to FTX. So FTX, in the after hours was down a lot. But if you see, the news was actually a one-time event. There was some sort of cyber hack, which caused the issue. And then when people started to realize that, they bounced it. And we've had these situations before with the one-time events where it bounces back and then people are like, I missed, I can get out, kind of where it's been having trouble recently. They sell and then it ends up going back down again. It becomes like the self-fulfilling prophecy. But obviously anybody who was watching it in the after hours, and they saw it was kind of a one-time thing, buying it into this kind of where the up move started from, they've now caught a move back up to 215. Yeah. So the way I would look at this, would I have 215 to 216? I have resistance right here for the last couple of weeks. Gets sold here, rolls over again. Maybe not all the way down to the bottom, but 212.50, something like that, for this area right here. And the second area would be 210. So that's my thought process on that one. GIS, which I already bought a little bit in the pre-market, coming into 52. So this one is interesting in that there's a very slight miss, and it's gapping all the way down through the recent low. So I think that's overdone. So that's why I bought that here already. Let's take a look at the daily. And so it's already off 30% from the high. So unless they're saying something in the conference call that's really nasty, this 52, it's as low as it's been since 2015.
VERI, just the two scenarios you talked about yesterday. So it starts running up and open and gets really crazy, like runs course, and so try to attack the first down move. And then the other scenario you mentioned.
Down 6% right now just seems way overdone to me. So we'll see right on the open, the volume's picking up. Just dropped 52. Maybe it flushes. I'm going to watch, see if it can get back above 52, let's say 20. So I'm long from right above 52. If it gets back above 52.20, I can buy some more and sell to bounce up into here. Unless it really bounces for real up into here. ALNY, this is going to be a tougher, crazier stock. They had good phase 3. Here's the daily on this. This hasn't been up at these above 95 in a couple of years. So, all right, so we got to go back to late 2015, early 2016, right here. So it had been down at like 87, it popped up to like 97, and then they crushed it all the way down here now. Since it bottomed, it had a gap up above 60. Clearly some of their drugs are working. So it's, 100 would be a double off the bottom there. So this is kind of right where it topped out in that on the daily I showed you late 2015. It's 97. Now after the open, if it's still holding above 95 and it still holds above 97, you can look for the pop to like 100. It looks like it already traded up at 99 initially when the news came out and sold off to 90. Which you could see a repeat performance of that, and then below that 88 is support. So I just threw some up here right as it was printing up into 97, but I didn't get taken. Right here. And then the key will be, like, if it fails somewhere in here, what happens when it comes back down to this 95 area? Does it actually get bought here and then rip to the upside, or does it fail below and come back into, let's call it 92 to 90? So it's going to be much trickier than the other names mentioned. That's why I worked its way at the bottom of the list. Quickly check in with GIS. Yeah, it's still at 52. SNCR. So this one, God, I should probably write a blog post on this one. I was definitely off on this. I did see a report where anyone said they expected it to trade back down to kind of where they put themselves up for sale, which was all the way down to the low 10s. I guess a lot of people get caught here buying it. They thought it would get taken out, so maybe it overshoots to the downside. I would expect over the next week or so it would work its way back inside of this range right here, which is 10 to 1150. Unless the reason they pulled out of that deal was the numbers. Anyway, I'll put it in the chat if I see something on why they pulled out of the deal. But right now I'm still long a little bit from above 10. I sold some at 10 in the pre-market. I'm thinking that it might have one more down day, maybe a flush on the open down to the mid-9s or something. And then work its way back up to 10.30 to $11. This range prior to the takeover. It looks like people knew about the potential deal in advance right here in this first day. SUPN, this was so yesterday was interesting in that, in the game plan, there wasn't really much in play in the pre-market, but on the radar by 10 o'clock, there was tons of stuff in play. So that's why it's so important, like, when there isn't a lot of really good stuff in play in the pre-market, to, like, go to the radar at 10 o'clock and, SUPN, which actually I'm not sure if it's in our universe, but certainly it was. You saw Mike was shorted in real time. That was very weak, and there's a bunch of other things in play. AET, the healthcare sector, maybe. I'm not sure. I guess they don't like the new bill that they're trying to get through Congress, but there was just a lot in play there. So those things made our second day plays. SUPN got crushed. Took out the 40 support and just came off to the next support area.
So yeah, not so much.
Kind of what BBY did, where it had that huge reversal and then another reversal. And we'll take a quick look at that if we have a minute.
Yeah, just kind of recycle shares and any pops and then.
So GIS already in the green on that one. So we've had a decent bounce, about $1.50. So I mean, the way I look at it is, 39 is kind of the first level, and then 40 obviously, and then 37.70, 37.80 is its support there. The next one is AET, which is the healthcare sector. This one got sold with that sector. The first leg down was tremendous. Came back up, consolidated. Couldn't get above 157. Broke to the downside. Took out the low. So this was a very clean trade. Even if you weren't in the first one, anytime there's a huge open drive in either direction, once you get a retracement and a tight consolidation, your trade, the safe trade, is just trading it out of the break of this consolidation. If we zoom in on it, it looks like, and this happens a lot, it tried to break to the upside here, but it never got above 157. And then it got to the bottom of the range, consolidated sideways. So it was clean, and it broke. And then you measure, what does it do at the morning low? It took it out before spiking up a little bit here and making another low. But this is pretty clean from 156 to 154.5. So it's about almost $2 right there. About 20-30 cents a risk. Looking at it this morning. I mean, same thing, I guess, here. This consolidation range, 156.30 or 156.80. What does it do when it gets back up into this range? Does it fail and roll over again below 156, play it short? Does it get in this range and break to the upside above 157, wait for a move to 158.30 or so? And then BBY. So it caught our attention because it was just, obviously they had the analyst day yesterday, had the opening drive to the downside, had the second leg lower. I played that short, covered into 52, got long on the flush below 52, and then I think got whipped out of it. I was off the desk for this kind of entire reversal, but it looks like it's tough, right? I mean, once it gets back at 52, some people might play for a quick scalp back up to 52.50. I actually went to this breakdown area, 52.90, before rolling over and then ripping up here. You might have heard me talking in real time. I was just shorting it a lot in this area right here. Got really big into the 54, rolled over here, covered a bunch, and then had a trailing stop up here above 80 cents. And then when I was off the desk again, it rolled over all the way back down. If I didn't get stopped out, I'd still be short it. Looking at it, looks like 52.40, 52.50 support, 53.5 to 54 resistance. I'll trade that range. That's it. It's getting late. So as always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.